President-elect Donald Trump not waiting to be sworn in to take action. Foxconn, the biggest supplier of Apple products, is in early talks to expand its operations into the United States. Japan's SoftBank pledging to invest $50 billion in American businesses. Donald Trump also threatening to cancel a big Air Force One contract with Boeing because he thinks the costs are just too high. And he made that deal with Carrier to keep hundreds of jobs in Indiana, important psychologically for the country right now, as opposed to them going to Mexico. And it sounds like he's not stopping there. Watch this.
We're going to have people that haven't worked for years. They're going to love working. They're going to love it. They're going to be incentivized. My administration will follow two simple rules. Buy American and hire American.
Now, some in the media worry that Donald Trump is being too heavy-handed with these companies. What does the host of Making Money with Charles Payne think? Charles joining us now. Bob Olstein still here. Charles, Bob said that earlier in the show that all of this is creating tremendous optimism in the stock market, and that investors like it. So is it a good thing?
Yeah, it is a good thing, you know, and I talked a lot, even before the election, about two things. There's the mechanical aspect of getting an economy going. We know that formula. Low taxes, get rid of these regulations. But the intangible that's critical is the animal spirits. People must buy into it. If people don't buy into it, they don't shop. They don't invest. They don't start families. The American public must buy into it. We saw earlier in the week, IBD came out with their economic sentiment number. Surged. The highest number in 10 years. Okay, it's not just that, by the way. Also this week, what did we see? First time since February of 2015, orders for Class 8 commercial trucks higher for next year. Small, medium-sized fleets are anticipating big-time business. We're seeing it anecdotally. We're seeing it in real hard economic data. The bottom line is something is stirring in the corporate C-suites and also on Main Street. And you don't get that at the same time all the time.
Right? I mean, yeah. but here's the thing. You know, we cover the markets day in and day out. We're talking to the business community. Everybody's optimistic right now. But, you know, you get the cover of Time magazine still pointing out that, you know, we are in a divided country. Yeah. They're saying that he is the president of the divided states. So how do you unleash all that optimism for everyone, right? I mean, you know, there are people that are still upset and reluctant,
uniform optimism. That's not what our country's about. There's always going to be critics. And that's healthy to have critics. The fact of the matter is the economy's starting to improve. And that's why the market's moved up and why some of the value stocks, and we are in a lot of heavy industry stocks. And the transition team, I think, is fantastic. I reached out to...
You like all those business people in there. You like all those generals
I really do.
People who have done something.
I reached out to one of our directors, who is a lobbyist and a very well-known lobbyist in Washington, and said I wanted to speak about the labor law. And about an hour later, one of Trump's transition team members called me and asked me all about the labor law, and I said, this is the worst.
Well, we need to explain what you mean by the labor law. The fiduciary rule that's going to go into effect with the Department of Labor, or that's supposed to go into effect in 2017, which in short version here, and many viewers understand this, is that the Department of Labor wants people as fiduciaries, financial advisors, wealth advisors, to essentially think about cost first. What is an individual going to do in their retirement investment account? It should be basically focused on expenses.
Right. I want the Department of Labor, when they go to the doctor, to only think about spending $50. It is not true that you can associate performance and whether a product is a good product or a bad product by its cost.
So let's just back up for a second. Yeah. So this is a regulation. We got a whole lot of regulations from this administration. This is another regulation, and this regulation would actually prevent an investment advisor from seeking what they think is the best alternative for their client, and instead go with just the cheapest one, period.
And then make a contract with their client. This is crazy. We basically charge a fee that's higher than passive investing because we hire analysts, we want to do research, we know...
But if I'm a consumer, shouldn't I have the right to make that decision? Why do I want the government telling me?
And that's why the transition team has told me they're going to do everything in their power to get rid of this. This is just...
Charles, let's just talk about other regulation that's going to hopefully, or many investors anticipate now with the move of the markets, are going to disappear. There's a time between the changes that actually happen and when it starts to impact the companies. Do you worry? I do worry that the market may be getting ahead of itself in the sense that these things aren't going to change overnight.
Well, Obamacare, right? Some within the transition team are saying give us 3 years, which is not unreasonable considering how do you change the tires on something with 20 million people who are on, a lot of people have lost their doctors, how do you keep the two key most popular parts of it? It is not an uncomplicated issue. But to your point, what I'm more concerned about are people trying to time this market. The average person out there saying, I missed this move, I'll catch the next one, because they don't. First of all, if you don't buy when there's extreme optimism out there, certainly you don't buy when it's falling apart, okay? And this is where a lot of people fool themselves on this. So if you happen to buy XYZ today at 20, it dips to 18, but 2 years from now it could be 30. Cool, be cool with that. This is what I keep telling folks. If you voted to make America great again, didn't you also vote to make your portfolio great again, too?
We run public money, and we call these people procrastinators. They never really invest.
That's what you call them when you're not just joking.
What happens is they say when your fund is moving up, I can't buy it,
Right.
It just had too big a move, and then it moves down, they say the world's coming
Okay,
away.
I'm going to take the other side of this. It's been very difficult to be a long-term investor for the last 16 years.
I disagree.
Go back,
We've
Bob,
done well.
come on, yes, but there have been periods. If I had been an investor in your fund, despite we talked about the spectacular performance in 2008 into 2009, I would have had to sit. So I want you to look at the camera and tell the viewers, how do you sit through those periods and be the long-term investor?
First of all, you shouldn't have all your money in equities, okay? They're a little bit more volatile than bonds. And basically, you only put money in that you can see drop 25% or a period.
Bob Olstein, Charles Payne, thanks for joining us.